All right, folks, we're about to feel another Bitcoin earthquake. The Fed's getting ready to bail out Wall Street again, and the money printer is about to switch back on. But this time, we're looking at a $2 trillion. Stick with me, and I'll share with you how I'm preparing to benefit from this tsunami of money printing. The hedge funds are cracking. The bonds markets unraveling. And behind the scenes, the Federal Reserve is quietly preparing to inject up to $2 trillion into the system. You won't see this plaster across the headlines just yet, but the printing machines is already warming up. And if you're wondering what this has to do with Bitcoin, the answer is everything. Because while Wall Street is panicking, Bitcoin is waiting in the shadow, about to do what it's always done when fiat system shows their flaws. Let me break it down. Right now, the US bonds is buckling. 10-year yield just pushed past 4.5%, level we've never seen in decades. That's not a healthy signal. That's a warning siren. And it's not just bonds. Hedge funds are sitting on one of the riskiest trades in the game. The basis trade, leverage to the teeth. Billions on the line. Some of the biggest hedge funds are already down for this year, forced to unwind their position. And what happens next? Forced selling, liquidation, margin calls, panic. And guess what assets get caught in the panic? Bitcoin. And here's the twist. That's not the moments to run. That's the setup. Because every time the Fed step in to save the system, they do it by printing trillion, flooding the system with fresh fiat. And every time that happens, Bitcoin doesn't just recover, it rockets. 2020 proves it. They printed and Bitcoin went from $5,000 to $69,000. We are staring at the same playbook again, except this time it's bigger. So some of you might be asking, if this is bullish for Bitcoin, why does it drop when the bailout starts? Here's what I learned. In the short term, hedge funds need cash, and they'll sell everything to survive: stocks, gold, and yes, even Bitcoin. Not because Bitcoin is broken, but because it's liquid. They're desperate. They're covering losses, not making investment choices. That's why Bitcoin sometimes dip right as the chaos begins. But once the Fed step in, once the $2 trillion start flowing, Bitcoin doesn't stay down. It flips, it leads, because the more money they print, the more obvious it becomes. This system isn't sustainable, and Bitcoin is the exit. Now, I'm not a financial advice, and I cannot tell you what you should do with your money, but I'll tell you exactly what I'll do to prepare for this moment. Stick with me, because in just a moment, I'm going to share how I'm personally getting ready to benefit from this bailout. I'm not here to tell anyone what to do, but if this really is the buying opportunities of a lifetime, I know exactly how I'm going to move. First, I'm staying liquid, meaning I'm not fully deployed. I got dry powder ready, just waiting. Cash, stable coins, whatever gives me flexibility. Because when the panic hits, I want to be the ones buying, not scrambling. Second, I'm watching for the forced sell. If Bitcoin dips, I see that as opportunity. It's not Bitcoin crashing, it's the system flinching. Hedge fund panic, they liquidate, and Bitcoin's temporary gets dragged down with it. That's when I start loading up. Third, I'm not trying to time the market. That's a losing game. I got my range. I'm stacking in pieces little by little. If it drops more, I add more. Simple. Fourth, I'm moving everything in cold storage. I'm not keeping my Bitcoins on exchanges. If this system already is cracking, I want full control. That means hardware wallets, no third party, no excuses. And lastly, I'm tuning out the noise. The headlines will say collapse. The banks will cry for help. But behind closed doors, the big money will be buying. And I plans to be right there with them. Again, I'm not telling anyone what to do. But this is how I'm preparing for the next wave. And I've got a feeling that what's coming next will make the 2020 runs look like a warm-up. The insider already know they're buying quietly through OTC desk, private allocation. Long before the headlines catch up, you won't see the orders hit the exchanges, but you will feel it in the price later. Meanwhile, global powers aren't sitting still either. China and Russia are dumping US bonds. BRICS nations are sidestepping the dollars. And when confidence in fiat evaporates, that capital has to go somewhere. Historically, it went to gold. Today, it goes to gold and Bitcoin. So ask yourself, if the systems is running on borrowed time and the only fix is printing more money, what are you holding? A dollar that loses values by design, or a decentralized asset that has built for this exact moment? This is your early warning. Don't wait until CNBC say Bitcoin surge on Fed's bailout. But then the real opportunities will be gone. Make sure to like this video, subscribe if you haven't done so, and hit that bell so you never miss what the mainstreams won't tell you. And my friends, whatever you have right now, make sure to hold it tight and stack it right. Take care.